Hello from Automotive Markets. This is Aaron. We'll be with you to review the US labor market NFP data and check the market reactions. Sorry, a little bit sick. Uh, as always, let's first check the data and then we can see how the market can react to these numbers. Average earnings increased by 3.8% annually, lower than 4% in registered or printed in February and 3.9% expectations. On the monthly scale, while in March we had 0.3% average increase, increase in average earnings, the previous months of February's earnings lowered to or revised lower to 0.2% from previously 0.3% that we had in initial numbers. Average weekly working hours increased to 34.2 for the February from 34.1 and repeated the 34.2 hours for weekly working hours for March as well. So there is no surprise. The only surprise, I mean, but the surprise so far we had in earnings, average earnings lower to 3.8%, and this month staying unchanged at 0.3%, while the previous months it's lowered down, lower to 0.2%. Going forward, government's payrolls increased by 19,000 after February's job cuts. We know that in February we had too many cuts and the government, especially in the government sector, we had too many cuts in the labor markets. That increased the tensions in the market somehow and uncertainty among the government workers. However, this month we had a little bit more cuts. We had more hiring. Which right now we have at the initial numbers we have 19,000. As you know, in the previous month, registered number was 10,000, which in review revised lower to 1,000 hirings for February. On the private sectors, we had 209,000 hirings, much more than 116,000 previous month and 127,000 expectations. The overall NFP also or non-farm payrolls increased by 228,000, much more than 137,000 market expectations and 117,000 previous months. But the thing is that the point is the previous month's 151,000 newly created job lowered down to 117,000, which means labor market still facing more challenges and we have more tensions in the market, especially with the new policies and the new government. That shows that the more we have right now, the more businesses that they have a doubt on hirings to hire or not to hire. Even we saw that in GLTs earlier this week. The GLTs also for this month for March lowered revised lower for February and for March for February revised lower. Generally, the labor market showing more sign of cooling, which means that the Federal Reserve can think more about the current situation. Going forward, these data bring the unemployment rate up to 4.2% from previously 4.1% printed in February. The main reason is February's service lower. The numbers which lower in February. We know that hirings in February increased much less than in the final data shows much weaker numbers compared to the initial expectations. So generally, these data means that the labor market still is weak and getting, I mean, this labor market showing more cooling signs. And so Federal Reserve can think more about the rate cut. After these data, FedWatch tools shows more than 37.3% chance for 25 basis point rate cut for next meeting. But however, which we're gonna have in May. But still, the market still is counting on not rates cut for may missing because these data still shows that this, I mean, the current overall condition in the market condition shows that the US economy, if you go and check the ISM numbers, surveys, if you go check in manufacturing PMIs, shows that still the US economy is still strong. So Federal Reserve and inflation is still high. So Federal Reserve will be more patient about starting the rate cut I mean, the continuing the rate cut, which is paused right now after two cuts. Generally, these numbers means that, but these numbers increase the chance of three rate cuts. So if probably, if I mean, in the next meetings, if we think about, for example, rate cut in June, and then rate cut in September, and then rate cut in December, it seems like more likely right now. With these data, we can say now the three rate cut is getting more chance for 2025, while we were thinking and we were talking about the only two rate cuts. The main reason because at the before people were thinking that with the trade war tensions that right now we have, especially after U.S. labor, I mean, what Mr. Trump called Liberty Day for April 2nd. What we have right now, we can say that right now with this data, which we have, it can somehow avoid the expectations of higher inflations, because if the inflation goes higher, that means that the Federal Reserve can hold the rates higher for longer as well. But since the trade tension also will put the pressure on the oil and energy prices. Right now, we can check out the chart as well. If when the energy, when this, let me bring the chart. What I'm talking about because it's very important to now pay attention. Checking the energy price, especially if we go and check the WTI, you can see that the oil price is falling down. Now the WTI price is going down to around $60, 61, $62, which means that the energy price can go lower. That's what Mr. Trump was talking about in a Davos as well. If we have the lower energy price, lower prices for the energy means that the inflation can slow down. So there is no worry for Federal Reserve. I mean, we wouldn't have so much concerns about cutting the rate to increase the inflation. So with the lower energy price, we can expect lower inflation, which means the Federal Reserve with these weaker than expected data despite the previous expectations, can think about continuing the rate cut, which Mr. Trump's administration is thinking about that the lower rates. At the same time, US dollar index, these data means that the Federal Reserve can go further and think about the more rate cuts, so it's not these numbers wouldn't be in favor, wouldn't be the favor, wouldn't be in favor of the US dollar. So we can still expect the dollar pressure. Still even thought that after fast lowering in the previous weeks, we may expect some correction, but this correction doesn't mean that it can change the direction. So it can be only the correction, not direction change. So generally, these data means that still we can expect more pressure on the US dollar index, more pressure still, the pressure on the stock market can continue. Even thought these data can support the idea of short-term correction, but overall, the market condition and the trade tension and generally what we have in the market right now wouldn't be in favor with the stock markets, will not support the stock market. So the downtrend in the stock market can continue. But these numbers can slow down slow down the downtrend I mean, it will slow down this downtrend, but it cannot change the direction. So we can have slower downtrend, but downtrend wouldn't be changed at the current situation. But for the oil, for the gold, for the gold market right now, these numbers, despite the in negative reaction of initial reaction, which we can see right now in the chart, gold we were expecting some correction after touching 3,000, above 3,100, the new all-time high. We were expecting some correction in the chart. That correction can happen, but same as the stock market, this correction, since we have a week, we're expecting a weaker US dollar, we're expecting the weaker stock market. This correction cannot be such a big correction. But I mean, but this correction can be a smaller correction, and after some correction, gold still can hold its overall demand in uptrend. But correction wouldn't be as sharp as before these data, before expectations that we had, the expectation that we had before publishing of these data. Generally, these numbers means that we have more tension still in the market, more pressure still in the stock market. The worries and the concerns and the tensions will be still on the trade tensions and the trade war and the tariffs. And market will be more cautious about those data. And NFP numbers didn't have such a big surprise even though the surprise was still supporting the idea of trade rate. I mean, the data is still the supporting of the trade rate cut. I mean, the supporting the idea of trade rate cut. As for the cryptocurrency market reaction could be same as the stock market. These data increasing the risk in the market, which is not a positive news for cryptocurrency market. So overall downtrend can continue, but as mentioned, for same as the stock markets, this downtrend, the fasting of the, I mean, this downtrend will be slower, but it cannot be, but it cannot change the market direction. That was the market data in reaction to this data and what we're expecting from this data and from these numbers. If you have any other question, don't hesitate to write in the comment section. I'll try to get back to you as soon as possible. Have a good time. Bye.